Thing number one, GDP comes in weak.
So first quarter gross domestic product came in at 1.6%. And that's a problem for two reasons. The first is it was way below expectations of 2.2%. A lot of times, Rob, when we talk about these things, we will say, hey, listen, they missed by 0.1%. Nobody's really measuring that closely. I can tell you that when expectations are for 2.2% and you come in at 1.6%, that's bad. That's a huge miss. And there were some economists that had numbers actually that were right around the 3% number. But to make things worse, you need to adjust these numbers. So part of it is we adjust for the change in private inventories. And that's just a fancy way of talking about inventory stocking and destocking. That nets to zero over time. And, whether store owners are adding to their shelves or letting some of their inventory run off, that doesn't really affect your gross domestic product long term. And so when we adjust that, in this case, it was 0.35%, that gets us to about 2% growth. So you think, okay, wait, that sounds pretty good. That's, close to that 2.2% number, but there's a bigger problem. The bigger problem, and this concerned the market, was the price adjustment, which is the way we adjust GDP for inflation, was 3.1%. Now, that's an issue for two reasons. One, it was significantly higher than last quarter. But the other thing is, I believe it's understated. That includes things like assuming, your food prices are up 2%. We've talked about that. It assumes owner's equivalent rent pricing for shelter, for housing, which is not accurate. If you look at, how much the Zillow indexes have gone up or the Case-Shiller index, any real estate index shows increases far above owner's equivalent rent, which is what the government is using for this stuff. And so basically, if that 3.1% price adjustment was off by just 1%, and I think it was off by more than that, but if it were off by just 1%, then what you really end up with is GDP growth of 1%. That is anemic and way below the estimate. This was not a good quarter for economic growth.
Gary, looking at the GDP from last quarter, 328 billion, debt at 500 billion. I mean, just how critical is it in this type of economy where it seems like a lot of misinformation, right? Seems like it's a rocky ship, but just how critical is it to wisely position your portfolio with what's going on currently?
So it's crucial. And the reason is that GDP number, let's say, I'm saying it was somewhere between 0 and 1%, depending on what inflation adjuster you want to use. The government says 2.2%, but let's say their number's right. Let's say the government is right and GDP growth really was 2.2%. The real issue there is we can get a look at how much government spending is distorting the economy. In that quarter, GDP growth, if you believe that 2.2% number, was 328 billion, but increase in federal on-balance sheet debt was about $500 billion. And so that tells you two things. One is that government spending is destroying value. The government overspent by $500 million. They added all of that debt, and we got $328 billion of GDP growth. So the multiplier there is actually a fraction, right? Every dollar of government spending is getting us less than a dollar of value. And that's horrible. The fact that the government is becoming a bigger part of the economy and destroying value it's just not where we want to be. The other thing is, if all of the increase in GDP can be attributed to government spending, and the government spending had a negative impact, think about what that means for the private economy, right? By definition, that means the private economy had a really bad quarter. And so we're at the point now where the government, by excessive spending, or through excessive spending is a better way to say it, is creating the GDP number they want. So they get, positive headline numbers. They're keeping us out of a recession officially. But the private market economy is being pushed out by all of this government spending. The government spending is destroying value. This is not sustainable, and it's not a good place to be.